Paul, thanks very much for joining us from London. In terms of ESG, just tell us some of the trends that you're particularly seeing there.
One of the most important trends, as has been highlighted by our Emerging Trends in Real Estate Europe report recently, has been around impact investing. And whilst that's something that may be a minority sport in the world of real assets, its influence is growing. So around 4/5 of respondents to our 2021 report believe that demand will actually increase over the next 3 to 5 years. But also, on the other hand, climate change is another strong trend that we're seeing in the market, and hardly new, of course. What has changed is just how much the stakeholder pressures ramped up in this area over the past year. So a number of governments are starting to introduce rules around mandatory climate risk disclosures aligned to the Task Force on Climate-Related Financial Disclosures, or TCFD recommendations. And net zero and decarbonisation is the other side of the climate coin. So we're working with a number of different clients, from institutional investors to global real estate companies and funds, to refresh their sustainability strategies in response to a raft of new policy measures around net zero that's kind of cascading down from national government targets.
And in terms of the speed of this change, Paul, I suppose how quickly are investors having to, and developers, I guess, having to adjust to this?
Even as COVID-19 has taken hold of our attention, we've seen a wave of bold business commitments, and around 300 global companies have now made net zero pledges alone. But I suppose for those that have, there are kind of varying levels of robustness. But what we do know is that leading net zero commitments have certain attributes, and that they're science-based, and they take responsibility for tackling emissions along the whole value chain, among other things. So really the speed of and kind of pace of change has been very quick, but there's also still quite a lot of challenges around definition, not only in terms of net zero, but also things like impact investing. But really, as a consequence of the pandemic, there are plenty of real estate companies and funds that will probably need to revisit their ESG strategies that they might have made a year or more ago to kind of adapt those for the new normal, let's call it.
Do you think, Paul, with this increased regulation and I guess scrutiny also from in terms of impact investing from the sources of capital like the pension funds, do you expect this regulation benchmarking to become, I suppose, a growing element that investors need to consider?
Definitely. I think we've seen this in particular with the minimum energy efficiency standards. So the UK government's new energy white paper has talked about increasing those minimum energy efficiency standards from an E-rated EPC up to a B. And that's actually a really kind of material increase in the expected performance. And so the costs that are going to of making those interventions to bring those buildings up to scratch are going to be much higher than what was previously seen when these regulations were brought in only a few years ago. And that kind of ratcheting up around sustainability related or environmental performance regulations is just going to increase as these different governments have to meet their national targets around climate change. It's only going to become more and more prominent, we think.
Do you see, therefore, that there's going to be, there's going to have to be, to a certain degree, a change or an adjustment in terms of strategies here for a lot of the investors?
100%. I think that whilst in the past, perhaps there were funds that might have been focused on sustainability, but it may have been about perhaps having a green building rating, and it might not even have required any kind of minimum rating, let's say, around certification schemes, BREEAM and LEED, that people know a lot about. Actually introducing a kind of impact investing approach to the way in which your entire business operates is something that we're going to see more of, we think, ultimately to kind of allow impact investing to evolve beyond standalone products and green buildings. Investors are going to have to consider it in everything that they do, and society, governments, investors and occupiers increasingly want action in that regard. So perhaps their input will be probably the most definitive way to ensure that impact investing in ESG really deliver on their promise.
Really interesting to catch up, and I look forward to seeing how these trends influence the market going forward. Thanks very much, Paul.
Not at all. Thank you, Richard.